Now, we also know, I'm a student of history, in particular around the housing market. And when you go back to the 1970s, the really rapid house price growth occurred just after inflation started to come down. Prices remained stable and didn't go down while inflation was high and while interest rates were really high. But as those interest rates stabilized and wages continued to grow after that inflationary bout, like we're seeing now in Australia, wages growth is accelerating while inflation's coming down. People's purchasing power increased, their sentiment improved, the affordability improved, and there was a huge run on house prices, causing house price growth and rental growth in the next 4 to 5 years. So when you're looking ahead at 2024, and while there may be another interest rate rise, there might be two, but again, people are being assessed on 12 interest rate rises. So in order to qualify, you need to be able to afford not just the current interest rate, but the current interest rate plus 12 more quarterly or 25 basis point interest rate increases, which is a huge buffer. And obviously that's what people have been assessed on for the last 6 to 9 months as well. So affordability is a lot better than it would actually be in terms of what people have to pay to service an interest rate, or the interest rates is a lot better than what they get assessed against. And that means that if that interest rate buffer comes down or interest rates stabilize and sentiment improves, we're going to see pretty solid house price growth, particularly in the affordable markets where renters have been paying more and more. So rents are going up in the last 6 months a lot faster than interest rates have been, and they'll continue to go up really quickly next year. And it's at the point now where we're starting to see a lot more reports of suburbs and houses being cheaper to buy than to rent. And again, incredible formula. Start seeing people shifting out of the rental market, desperate to get into the housing market to save money. And that's also going to put upwards pressure on house prices. So there's a great mix of positives for Australia's housing market, and the handbrake is the, I guess, fear of interest rates more so than the actual interest rates. It's the fear of interest rates going up that's feeding into sentiment and keeping a lid on house price growth at the moment.
Yeah, great summary. Obviously around the fundamentals and the impact that they all have. I think if I think about the media and what they report the stuff the things that gets the eyeballs. So it's about the rental crisis, it's about the house price growth, it's about price crashes in a negative environment, it's about inflation, interest rate rises, all these things. One thing that we talk a fair bit about that is not well understood or kind of recognised, thrown in the mix, if you like, is the wage growth and just how much that's changed in recent years. I know I was over in Europe in the middle of the year. Australian house prices are cheap compared to some of these other, older, larger capital cities, specifically London and Paris I'm thinking of. The wage growth helps support those moving forward. Can you talk to the wage growth side of things a little bit?
Absolutely. And look, there's two parts to this. Actually, there's more than two parts. I shouldn't put a number on it. Firstly, we're seeing much higher wage growth. We're seeing people working more hours, and obviously wage growth is often reported on an hourly rate basis and on an ordinary wages, as opposed to wages plus commissions and bonuses. And we've seen a lot of businesses around Australia favouring commissions and bonuses. So households are earning more from commissions and bonuses than they would have otherwise, or pre-COVID. So we're also, on top of that, seeing the workforce grow. There's 1 million more people working in Australia today than there was just before COVID hit. 1 million more. There's certainly not 1 million more houses in Australia in the last 3 years, but there's 1 million more people earning a wage, and those wages are higher and they're working more hours. So more people in the workforce, working more hours, earning more per hour, plus bonuses and commissions means people's spending capacity is a lot higher. And not to kind of minimize the fact that, yes, there has been inflation in a lot of items, but many of those items have actually started to see deflation now as well. Not all of them, but some of those things. So cost of living is improving when you factor in that wages are now growing faster than a lot of the household items that people need to spend. An outlier of that is rents. Rents are continuing to go up, so people who are in the rental market are being hit harder than people outside of the rental market. Now, if you work on the basis of, I guess, a household earning 100,000, then on average around Australia today, those households are earning $12,000 to $15,000 a year more than they were before they went into COVID. So that's obviously been a big improvement for a lot of households. That's offset some of that cost of living. We also know that coming up in 1st of July of 2024, that the stage 3 tax cuts are going to come through as well. And that's going to reduce the amount of tax people pay. So that's like getting, for some households, up to $7,000 a year extra after tax. And for kind of the majority of households, it's going to be a couple of $1,000s extra in their pocket. That's like a free pay rise. So yeah, that is having a huge impact and likely to have an impact next year as well. And probably one other thing that, when we talk about affordability, I mean, the Queensland government has just announced that they're doubling the first home buyer grant for the next 2 years. So for people building or buying a brand new property, they're going to get $30,000. There's also a range of other government schemes, one that enables people to borrow money with an incredibly high LVR and save $10,000 to $15,000 on lenders' mortgage insurance by having the government underwrite that mortgage insurance for free, meaning that the amount of deposit needed to get into the housing market for first home buyers is a lot less today than it was. So again, coming back to that the comment I made earlier, that it's cheaper to buy than rent in some suburbs around Australia right now, many, in fact. The biggest obstacle is getting a deposit. And if the government can reduce the amount that you need to come up with and almost make it $0, then it's literally just a question of, would you rather pay your mortgage or pay rent to somebody else if you're a tenant? And we're going to see a shift, I suspect, in the next 12 months there as well.
Yeah, great. You kind of anticipated my next question. So you were talking about the stage 3 tax cuts that are coming in 1 July 2024, and the very recent announcement around the first home buyer side of things. But are there any upcoming or recent policy or regulation changes that you think will have a notable impact on the property investment landscape in 2024?
I think they're the main ones. There are a range of things that the government's been doing for the last few years that, to be honest, have contributed greatly to the housing crisis that we have right now. One of those is the interest rate serviceability buffer being raised. Understandable when you could borrow for 2%, that they would increase the buffer to 3% to just make sure that when interest rates went up, people weren't going to be getting caught out. But now that interest rates, people are borrowing around 6% or more, and they're being assessed like 9%, it seems extremely conservative. And as I touched on at the start, it's holding people out of the market and it's affecting housing supply. It's making it harder for people to borrow to sign a contract to build a new property, which would alleviate some of the housing stress that particularly renters are faced with right now. There are other things that the government's talking about, which is mostly in the planning space. They've announced that they want to build 1.2 million houses, or they want Australia to build 1.2 million houses in the next 5 years from mid-2024. That's 200,000, in fact, 240,000 a year for that 5-year period. And we're on track for about 130,000 building approvals in the next 12 months if things don't turn around rapidly. So that kind of talks to the fact that there is a huge crisis the government is aware of, and they're setting an ambitious target. Now, we've never built 240,000 homes in 2 years running. We've made it close once in around 2016, before the government started loading up with disincentives for people to buy or invest in property. And those disincentives were not just the interest rate serviceability buffer, but higher hurdles for investors, a premium interest rate for property investors, a premium interest rate for interest-only loans, changes in stamp duty.
90% for investors for a period of time. They reduced the LVR.
100% lower LVRs, changes to stamp duty laws and concessions to, again, make it harder for investors to participate in the housing market. And again, those things shrunk the size of the market. They stopped new developments from getting off the ground, contributing to the housing undersupply, and they took workers, as a result of those diminished approvals, they took workers out of the housing construction market and they redeployed them into government infrastructure projects. So they were no longer there to enable houses to get built. So we have a huge problem in Australia with this housing crisis, and overcoming it is not as simple as making an announcement that we want to build 240,000 homes a year for the next 5 years. And it's certainly not as simple as saying we're going to give local councils cash incentives to speed up approvals or to rezone land, because even rezoning land takes 3 to 5 years before it increases any supply in that area, because land isn't always owned by the appropriate entity. It might not be owned by a developer yet. They're going to wait until it's rezoned, then they buy the land, then they go through design, approvals, tendering, pre-sales. It takes many years for that housing supply to be corrected. So I guess what I would expect to see, I guess other things that we might be seeing in the next 12, 24 months is going to be a lot of generic statements coming out of the government talking about what they think others should do or that they're doing to combat the housing crisis, but not a lot of concrete actions. The real actions that they could take to actually make a change would be to start evening the field, to enable investors to participate more in the housing market, and to enable more homes to be built. And in the absence of that, and even if they do make that announcement in the next 6 to 12 months, again, it's going to be a couple of years before we see any correction in the amount of supply that's coming to market. So it's a challenging time for renters, and I think the amount of housing stress we're seeing in that rental market, the amount of homelessness that's coming off the back of that, people getting squeezed out of the rental market, is incredibly sad, could have been avoided. And I guess the flip side of that is that it means that today and 2024 is one of the safer times I've ever seen for a property investor. I mean, there's absolutely no question that producing a house or buying a house, you'll be able to secure a tenant, that you will have long tenure, that you'll continue, you'll be in a very solid position to pay your mortgage. And obviously I'd love to see more investors being able to help to alleviate the housing crisis for those people in the rental market or that are priced out of the housing market right now. And I guess the solutions, I think, are there. There are options there for the government. I don't think they'll necessarily take them. But I think, as I said, for investors weighing up whether to get in 2024, I have never seen a better time. And the key, though, is to focus on those areas that are affordable. Remember, these are the areas that get the government grants for first home buyers. So there's more competition, where rents are rising most rapidly. As people get priced out of expensive properties, they try to find cheaper ones, and it means the cheaper properties become more expensive very quickly. And it's also where you're going to have the highest rental yield relative to the purchase price. And we're seeing it in the markets that have performed really well in the second half of 2023. They're the affordable cities, and the affordable markets within those cities are massively outperforming the more premium markets. And while we might see in 2024 those premium markets starting to come off, and we're going to see less house price growth in the premium markets, and that might feed through to, I guess, what might be perceived as stagnation in the median house price. that's going to be playing out while at the same time, the cheapest 25% of suburbs in Australia are going to be going up in price very rapidly as they have for the last 6 months.